Hello, my dear aspirants. Welcome to Clarity for Sure. Today, in this video, we will try to understand the important announcement made by the RBI with respect to loan values for the gold. That is LTV value, right? Loan to value ratio. So RBI has made the final norms over the gold loans. All right. So it's very important for your upcoming examination. That is RBI as well as other regulatory body examination. Let's try to understand because uh, from last few days the discussion is going on over the that what should be the cap, the minimum cap that RBI should put for the loan to value ratio. So the final decision has come. So let's try to understand first loan to value ratio. What is this loan to value ratio? So as the name suggests, like loan to value, value of what? Value of gold, and loan who is giving value of gold, and who is giving to the loan? The loan, the lender is giving the loan, right? So it's a ratio of loan that one is getting, that this person is getting for the value that this gold, the person is holding some amount of gold, the value of gold, whatever the value of the gold for this gold, what what is the loan amount that a lender is giving to him, right? So this is called loan to value ratio, percentage of loan amount compared to the value of asset placed as collateral, because this amount and this loan he is keeping in the form of collateral to various loan sanctioning authority like Muthoot Finance, and as well as other loan gold loan agencies, right? So here, through this diagram, it is written over here as well that this person is pledging the gold as a collateral to this lending agency of value 1 lakh rupees. Suppose he is giving the gold of value 1 lakh rupees. For this, now he will go get the maximum amount up to 85,000. That is 85%. So the loan to value ratio is 85,000, and this is up to 2.5 lakh. This means if a person is willing to get uh, the loan up to 2.5 lakhs, right, then he or she is falling under this category of loan to value ratio of 85%. We will see the categorization and all. Now, this is the final norm. You can take the screenshot of this norm, right? This is the final norm that RBI has finalized with respect to gold loans. So the ratio, as we have discussed, loan amount to the market value of that gold, for which what is the loan amount that the person who is putting his or her gold in collateral is getting in return, right, from the lending agencies. Updated loan to value guidelines. See the updated for loans below 2.5 lakhs, because the one who is borrowing the money in putting their gold in collateral for smaller amount means up to 2.5 lakhs, 1 lakh, 1.5, 2.49, right? So basically they are doing this for consumption related purpose. Okay, they are not doing that for investment, right? So try to understand that they are doing for consumption related purpose. It means what? They are the small borrowers who are who wants to meet their daily requirements or any sort of financial crisis that may arise in any family because of hospitalization or educational, right? For that, these small borrowers is going to the lenders and borrow the money, putting their gold, right? So up to 2.5 lakh, the loan to value ratio is capped at 85%. It is capped at 85%. Just remember, 2.5 lakh up to 2.5 lakh means below 2.5 lakh, it is 85% LTV, right? From 2.5 to 5 lakhs, 2.5 to 5 lakhs, obviously their requirement is more. So the percentage cap, because risk is also there. Now, if a lender is providing loan to the borrower, it means at with higher values, right? Then risk is also there, risk of repayment and all. And if a person is willing to borrow up to 5 lakhs, then it is not like they are small borrowers. Okay, they are mid-size borrowers. These are mid-size borrowers. Okay, not the small borrowers. So for them, loan to value ratio is reduced to 80%. There is a difference of just 5%. Just remember that the difference is minus 5%. Okay. Then if one is willing to borrow more than 5 lakhs, okay, more than 5 lakhs, then the loan to value ratio is kept at it is capped at 75% as earlier. It is capped at 75% as earlier. All right. So this was there in the news, and this is a very important figure: 85%, 80%, and 75%. All right. So it just jot it down in your notebook. Okay, now let's try to understand the various terms associated with the LTVs as well as the terms discussed in this RBI circular. Okay, with respect to gold loans. The first one, LTV maintenance requirement. So, as per the prescribed LTV ratio, it should be maintained. Prescribed LTV ratio, that is 85%, 80%, 80% and 75%. This is the prescribed LTV ratio. It must be maintained throughout the loan tenure. It is not like while taking the while borrowing the money. If this person is borrowing the money from Muthoot Gold Finance, then it should not be like on first month only he should pay the interest, right? So it should be maintained throughout the loan tenure. If the loan tenure is 1 year, 2 years, 3 years, 5 years, whatever it may be, so it should be maintained. LTV ratios must be maintained throughout the loan tenure. Okay, if one cannot reduce, it is not like that 85% I am giving, and again if that person is again asking for then we will reduce it, right? So it is not just at the time of sanction, rather it should be maintained throughout the loan tenure. Second one, credit risk management approach. So whose money is at risk? The one who is lending, right? So lender has to ensure that they should manage their risk for the credit provided to the borrower. Okay, they should manage the risk, and this will only be possible if the lender can decide on sustainable lending, suitable lending approach under the credit risk management. After seeing the track record of that particular borrower, the track record, okay, whether that borrower is defaulter or not for their earlier sanctioned loan, similar type of loans, right? So the risk management. So overall, before lending, they should track the lending approach in order to manage the sustainable risk under the sustainable risk management approach. Okay. Now, the next point, the next detailed credit assessment requirement. So, who is going to make the detailed credit assessment? The lender is going to make the detailed credit assessment of that particular money, right? Of that particular credit. So, detailed credit assessment must be conducted by the uh, lender for the borrowers whose amount is exceeding 2.5 lakhs. Okay, if the borrower is willing to take the loans in respect of the gold, putting gold as a collateral, okay, then the lender must do this credit assessment in detailed form, so that in order to reduce the risk associated with that particular loan, right? Measuring the repayment capacity of the borrower. Now, top up and renewal for existing loans. So it is permitted under the certain conditions, that in what condition one can top up their loan or renew their existing loans. So what are these conditions? Must be formally requested by the borrower, means in the form of letter, he or she must, or email, right? He or she must request for the further loans. Fresh credit assessment should be done by the lender. Okay, must be within the permissible LTV. It should not cross the LTV value of like 80% or 75%. It should be under the permissible LTV value of that is permissible under the RBI guideline. And loan must be classified as a standard, means it should not be overdue or impaired. So loan must be classified as a standard. So these are some of the conditions in order to get the top up in their credit or renew their existing loans. All right. Now coming to the next slide. special rules for bullet repayment loans. What is this bullet repayment? See that a new term arrived. A new term is being discussed over here. Bullet repayment means one-time payment. Suppose you have taken a loan, a borrower is putting his gold of rupees 3 lakhs, right? And the lender is providing him the money of around with 80% means 2.4 lakh, right? 2.4 lakh he is giving him the money, right? So but he is not repaying the interest amount, and the tenure is suppose 3 years, and this borrower is not paying the interest at regular intervals, means on EMI basis. Rather, after 3 years or in between, before 3 years as well, he is giving the entire amount at once, right? So this is called the bullet repayment loan, means principal is repaid in one lump sum at maturity, right? Principal is repaid and one lump sum at maturity means 3 years, right? So this is called bullet repayment. But this will only be acceptable if the accrued interest is also paid. Means whatever interest this lender is charging over that borrower, it should be paid till the maturity. Then only the bullet repayment loan will be uh, accessible, right? Then only this facility will be available with that particular borrower. Bullet repayment, one time payment at the time of maturity, but he or she must pay the interest for that tenure, right? Renewed after accrued interest is paid. Renewal and top up must be certainly identified by core banking solution or loan processing systems of the banking system, okay, by that particular lender, by that lender. Then collateral ownership verification. So collateral ownership verification should be done by lender themselves, okay. Lender must not extend the loans where ownership of the gold collateral is uncertain or doubtful, okay. If the one who is providing the loan, the borrower, if he or she is uncertain or doubtful, then lender should not provide the loans to them, else it will get defaulted. Right? A suitable documents or declaration must be obtained from the borrower to confirm the rightful ownership of pledged loan. So whatever loan he or she is putting to the lender to get the money to avail the loan, so they must provide a proper documents. Means the documents like, for example, the bills, the invoice of that particular gold which he is putting in the form of collateral, okay. The proper document should be there, then only the ownership can be verified, right? Now RBI has taken a balanced approach in formalizing loan for gold loans. How RBI is taking a balanced approach? See here, easy age access for small borrowers up to 2.5 lakhs. Sorry, age access for small borrowers with up to 2.5 lakh with 85% of loan value. Maintain the prudent lending practices. How one can maintain the prudent lending? Means measuring the credit risk associated with the loans. Credit risk management is should be there. Proper assessment before providing the loan should be there. So prudent lending practices should be maintained by the lenders. Ensure the risk control through credit assessment. Tightens check on collateral ownership, like invoices and all should be checked. This offer this offer more flexibility to the borrowers, especially in low ticket category, small borrowers, while also enhancing systemic safeguard for the lenders at the same time. All right. So these are the things associated with the gold loans, the RBI revised norms. So you need to remember the points. And at last, one question is there. You can write the right answer of this particular question in the comment section. As per the updated RBI guidelines, what is the maximum loan to value ratio permitted to gold loans for the one who is willing to take the loan for consumption purpose and amounting is less than 2.5 lakhs. So you need to answer the correct. You need to answer the correct answer. Even if you know the answer, then I would suggest you to please type. Move your fingers and please type the correct answer in the comment section. All right. And at last, we have this program, RBI Mentorship and Test Series Program 2025. And in this program, we provide you all the materials, all the PDF materials of each and every topics of your syllabus. Apart from that, all the circulars, the important circulars, reports, guidelines of the RBI are being covered, right? The important speeches of governors, deputy governors are being covered, right? And weekly current affairs analysis sessions are being conducted. And in this weekly current affairs analysis session, we provide you the detailed analysis of important financial ESI events, okay, from newspaper itself. Means 6 to 7 newspapers are being covered in this weekly current affair analysis. We will definitely enjoy that. And we also give you the hint that from where the phase 1 question can be framed from the current affairs, and where you can put your knowledge into the phase while writing the descriptive in phase 2. That where you can put the case studies, where you can put the example, the recent examples actually. So current affairs is provided in a very good form over here. Then we have the test series in this course. That is the test for phase 1 as well as phase 2 is there. And apart from that, we provide you the various tests over different section of your syllabus as well as the current affairs. These are additional test series, right? So these are the things we are providing in this mentorship program. You can enroll into this program in order to avail the benefit in just 2499. This is the course fee. All right, students. Thank you very much. Have a nice day. Bye bye. Take care.